Welcome to the Cameron James Pension Channel, where we break down everything you need to know in terms of UK pensions. I previously shared a video about a client who lost £80,000 in one day because they sold down during the Trump tariffs. Today I'm going to be sharing the other side of the coin of a client who was also extremely scared and worried, was wanting to sell down their portfolio, and we stopped them from doing so. For any of you who are not subscribed to the channel, please do hit subscribe and like below to let everyone know that we're doing a good job with the algorithm. We then promise to reinvest more money and time into the channel to produce more free educational content for everyone. Okay, so I'm going to dive into this client. Now, actually, to give a background of this client, this is an extremely smart, very entrepreneurial client of mine who was based in the US, has multiple businesses, is a millionaire quite a few times over. But this was the email that I got from the client on the 21st of February. Hi Dom, I'm getting seriously concerned about the US market and what Trump is pushing through. I would also like to review my current portfolio and seek advice to de-risk my investing and move a little bit more into safe strategies. I'm also interested to balance the portfolio with more global and emerging market investments. Can we have a chat or a catch-up? Now, instantaneously, whenever a client has something like this, you need to go back to them very, very fast. So I went back to the client within 12 hours. Hi Glen, I hear you. I understand your concerns. It completely feels normal to feel like this. I'll keep it short for you here. My empirical answer to you as your IFA would be absolutely not. Sounds mental, but we are not interested in the short-term market movements, and there is nobody on the planet who can predict where the financial crash will go. It could be next year, it could be the year after, it could be a 10-year bull run. When you look at the long-term trend of the S&P 500, circa 10.5% of annual return, the S&P 500 couldn't care less who is president long-term. It is time in the market as opposed to timing the market, which is the most successful investment strategy I've seen in my life. Had I adopted that investment strategy when I was 16 years old, which is when I started investing my money, I would have a damn sight more money now. I will always give it to you straight, and that is what you're paying me for. My professional advice would be to change absolutely zero. Keep investing your money in the equity markets as you are, and in 10, 20, 30 years time, I do not think you will regret it or look back. Let's jump on a call though next week to run through it. Now, when I jumped on the call with the client, he wasn't happy, okay? The client has numerous businesses. He was also based in the US. He does a lot of economic analysis for his companies. He said, Dominic, this time's different. What he's doing, it's crazy. Have you seen the AI? Have you seen China? Have you seen this? Have you seen that? And I just said to the client, look, it's your money. Glenn, you can sell this money down. It's yours. But I do not advise you to. I strongly do not advise you to. If any of you see my other video, which the team can put up here, of the client who lost 80 grand by selling down, you will also see how strongly I advise that client not to do anything. But in that instance, they actually did decide to sell down. The client came off the call with me for 25 minutes. He wasn't impressed, but I got him back to a neutral point. And he was just a little bit like, okay, Dominic, well, I think part of him was feeling like, I feel like Dominic's not listening to me, but also the empiric data I gave him was enough to sort of satisfy him and keep him quiet for a bit, in the politest possible sense of the word. I actually then went on holiday a couple of weeks later. The client was then in my WhatsApp. As we were approaching more towards 2nd of April, 3rd of April, 4th of April, when everything turned into chaos. When we have a look at the trend here, we can see what happened over that period. Trump obviously announced on the 2nd of April his trade tariffs. 3rd of April, markets are down 4.84%, S&P 500. April 4th, markets are down 5.97%. I think it was around these days the client WhatsApped me again and said, Dominic, I told you, look what's happened. He had about £1 million in his portfolio, a bit more than that actually. He's like, Dominic, my portfolio is down 100, 150 grand, whatever it is in 2 days. This is horrible. I'm feeling scared. Can we now move to cash, etc., etc.? I again went back to the client. Client, yes, you can move down to cash. However, it's not my suggestion. The client said, let's reallocate to emerging markets. I said, what does that mean? Well, do you guys have any ideas of what else you could do with the money? I said, but what emerging markets? What does that mean? What, India, Brazil, Russia, China? Like, what, you want to go and invest in China right now? You want to invest in Russia? You want to invest in India? Like, what does that actually mean? It's running away from one thing into something else just because you're scared of the volatility in the market. The S&P 500, the US is the world's largest global stock market. If you go underweight on the US, then you are trying to outsmart the markets, which in my opinion, very few people have managed to do consistently over the course of time. A handful of people come to name, with Warren Buffett being a very famous one of them, and the late Charlie Munger. So I think this is a really good example with this client, and the client held the course. They didn't sell down. Actually, the client got very close to. They asked for the dealing sheet to move into cash, which we sent them. Then the markets had a little bit of a bump and the client obviously stopped. So this is a really good example. And at the time of recording, Or at the time of when we were speaking, his portfolio was about 150 grand down from where it had been in around February time 2025. That was the point the client was the most scared, but they managed to hold on based on the advice from their financial advisor. And this is unfortunately so many people, when they're signing up for financial planning advice, 1% a year, it's so expensive. I don't want to pay that. I'll manage it myself. You can't manage your own emotions. The worst investors proven are retail clients when it comes to managing their own money because it's very difficult to remove the emotion. My client here, Glen, if he was sitting on a trading account and one click he could have sold down, he would have sold down numerous times over during the panic. By having that stopgap, by having a financial advisor to reach out to calm you down, talk you off the ledge, that is worth the money. The client's paid me 1% a year for this. It's called a £1 million portfolio, 10 grand a year. My advice in this situation stopped him losing 150 grand. So I've paid for our advice fees for 15 years, just one period of volatility. Those periods of volatility will extrapolate out. There'll be maybe 5, 10 periods of volatility between now and the client ultimately retiring or passing the money on to his beneficiaries. So the cost of having a good financial advisor who holds stern and tells you what to do is extremely beneficial. The client is obviously now very happy. Their portfolio is actually above and beyond what it was before the Trump tariff started. I did get a little message from the client last week. They're talking about Iran, and I just said, Glenn, don't do it again. We did this a month ago. We did this 2 months ago. I'm happy to go through it all over again. I'm happy to show you the data. I'm happy to go through everything, but don't make the same mistake that you nearly made a month and a half ago or 2 months ago and lost yourself potentially serious amounts of money. So this is a really good example of why taking good quality financial advice is important. You don't go to the garage, give them your car, and they say, you need to change the gearbox, and you say, no, I think it's the carburetor. You take the advice from the mechanic and you get on with it because you don't understand what's going on inside the hood. Just because you have a valuation statement and you can see the figures going up and down and you read the news and the media, everyone, financial crash, financial crash, financial crash. The media and the news make money by you watching their stories. Fact. If you're not paying for it, then you are the thing that's been commercialized, which is yourself, for them to make paid advertisements for their newspaper, their website, or whatever. So stay away from the scaremongers and look at the long-term empirical data of staying the course in a globally diversified equity portfolio. And as always, take care of UK pension assets, especially during periods of high volatility when it's easy to make schoolboy errors, as we call them here at Cameron James.